What's going on, guys? Welcome back to the Crypto Novice, your number one source for everything in the world of cryptocurrency news. But before we get into today's video, as always, I just want to say that I'm not a financial advisor. This is not financial advice. Do your own due diligence and research and never invest in any cryptocurrency you're not sure of. And remember that these videos are for educational purposes only. So we are on Cointelegraph here today, and we're talking about inflation and war impacting the crypto markets. But Paul Tudor Jones says that he loves Bitcoin and gold, as the investor says he is bearish on US stocks and bullish on Bitcoin and gold. Investing legend Paul Tudor Jones has revealed that he's bearish on stocks, bullion and Bitcoin and gold, bullish, stuff like that, but bullion, anyway. The two main reasons he cites are the potential for an escalation of the conflict between Israel and Hamas for subpar fiscal conditions in the United States. While an inverted yield curve wasn't included in Tudor's comments, it's yet another important factor for investors to consider, as the geopolitical conflicts exacerbate macro uncertainty. Okay. By the way, if you're new to the Crypto Novice, hit that subscribe button down below, turn on the bell for all notifications, drop a comment. If you want something covered in the world of cryptocurrency news, we'd be glad to do that for you. Let's continue. But in a recent interview with CNBC, he mentioned that the factors he's keeping an eye on with regard to the Israel-Hamas conflict before deciding that market uncertainty has been reduced. His general thesis is that if things escalate further, a risk of sentiment could prevail in the financial markets. However, despite the potential for geopolitical tensions to escalate the near term, the major U.S. indexes have all posted gains for the first two trading days of this week. If he is right, the rally will likely be short-lived, as you can see by this graph here. If you want to check that out, you can check that out. However, the yield curve remains deeply inverted, as one of the greatest indicators of recession historically has been the yield curve. Every recession since 1955 has been preceded by an inversion of the curve between the yields of the 2-year and 10-year Treasury bonds. Now in July, the 2 and 10-year yield curve for U.S. Treasuries hit a low of 109 basis points, or BPS, 109.5. This level had not been seen since 1981, so 42 years. While this inversion has since steepened things, it still looks bad from the perspective of shorter duration Treasuries. The 1-month and 3-month US T-bills are currently yielding close to 5.5%, while the 2-year note is yielding close to 4.96%. The 10-year is yielding to 4.65%, meaning the 2s and 10s curve is inverted by 31 BPS. A flatter yield curve compresses margins for banks because it limits their ability to borrow cash at lower rates while lending at higher rates, which can lead to restricted lending activities and resulting economic slowdowns. It also means that the investors are less optimistic about the near-term future of the economy as they sell shorter duration debt, causing trends to rise, or yields to rise. The Federal Reserve's attempt to fight inflation by raising rates at the fastest pace in modern history has also played a significant role, as higher rates create additional stress on the banking system, which has been 3 of 4 largest collapses in U.S. history this year alone, with the failures of Signature Bank, First Republic Bank, and Silicon Valley. Now, some market observers have speculated that the Fed will have to begin lowering rates as early as 2024 to prevent further economic fallouts, even if inflation has not come down to the Fed's desired level. Easier monetary policy and its corresponding liquidity boost tend to be bullish for crypto markets. If rates do fall going into the 2024 Bitcoin halving cycle, the stage could be set for significant market moves. Bitcoin and gold remain the preferred and safe havens. Amid all the chaos, gold and BTC have remained resilient, as BTC has fallen 2% in the last 2 trading days, being flat over the last 5, while gold is up 2% during the same time. Paul Tudor Jones summarized his position gold and BTC, saying that he loves stocks, but he loves Bitcoin and gold. Now, the billionaire has said on record that he maintains a 5% allocation to BTC, and he sees gold and BTC as safe haven bids during uncertain times. Tudor first announced that he made a 1% allocation to BTC in May of 2020 during the COVID-19 pandemic bullshit lockdowns, which is all garbage. It wasn't even real. Anyway. All things considered, Jones could be right. Now time's going to tell if a bearish is going to call for equities as it plays out of risk on sentiment somehow prevails in spite of recent events. That's going to do it for this video here on the Crypto Novice. Like, comment, subscribe, share, leave a comment. Let us know what you want covered in the world of cryptocurrency news. Take care. We'll see you in the next video.